For centuries, gold has been seen as a symbol of wealth, trust, and stability. But is it really that safe? Today, we'll uncover the truth behind gold investment, the risks, the returns, and the myths that make people believe it's unbeatable. Stay until the end, because the real answer might surprise you. Let's start with a simple question. Why do people trust gold so much? It's not just because it shines or looks rare. Gold has been used as money for thousands of years, from ancient empires to modern central banks. It doesn't rust, it doesn't decay, and it's accepted everywhere in the world. During wars, inflation, and economic crises, people have always turned to gold. This emotional connection, the belief that gold lasts forever, is powerful. But sometimes that same belief blinds investors from seeing the truth. Now, let's look behind the sparkle. Gold isn't as stable as many people think. Its price can rise or fall dramatically within days. Between 2011 and 2015, gold lost almost 40% of its value. Imagine buying at the top thinking it's the safest investment and watching half of your money disappear. And remember, gold doesn't generate income like stocks or real estate. It pays no dividends, no rent, no interest. It's simply a store of value. That means your profit depends entirely on someone else paying more than you did. Many investors say gold protects against inflation. That's true, yeah, but only in certain situations. During extreme inflation, like in the 1970s, gold's value skyrocketed. But during moderate inflation, gold often lags behind. In the last decade, gold has underperformed compared to stocks and even some bonds. So yes, gold can preserve value, but it's not always the perfect shield people believe it is. Remember, gold doesn't grow the economy. It just sits there. And in a growing economy, just waiting can sometimes be the biggest lost opportunity. Let's be fair though, gold still has an important role. When the world feels uncertain, gold acts like insurance. When people lose trust in governments, currencies, or financial systems, gold shines. For example, during the 2008 financial crisis and the COVID-19 pandemic, gold prices went up. Not because the economy was strong, but because people were afraid. In short, gold shines the brightest when everything else turns dark. That's why smart investors don't put all their money in gold. They keep a small portion in it, just enough to balance their risk. So, should you invest in gold? The answer depends on your goals. If you want protection from global uncertainty, yes, gold can help. But if you're after long-term growth, gold alone isn't enough. Think of gold as insurance. You hope you'll never need it, but it's still wise to keep a little of it around. Experts usually recommend keeping 5 to 10% of your portfolio in gold or other precious metals. In the end, gold isn't magic. It's just a tool. It protects, but it doesn't multiply. So, the next time someone says, gold is the safest investment, remember, safety depends not on what you invest in, but how you invest. Thank you for listening. If you enjoyed this story, make sure to like the video and subscribe to Investment Verse. Stay tuned for more real stories from the world of finance and investing.